Hi, I'm Brandon Poe, founder of Poe Group Advisors and creator of the Accounting Practice Academy. You are listening to the Accountant's Flight Plan podcast, where we talk about stuff in the accounting world. If you're looking to buy or sell a practice, we are the premier accounting practice intermediary firm in the industry. Check us out at PoeGroupAdvisors.com. If you're a firm owner looking to build a more profitable practice while actually reducing owner hours, sign up for our practice management workshop, which only runs a few times per year. Learn more at accountingpracticeacademy.com. All right, welcome to the Accountant's Flight Plan podcast. I'm very excited about our guest today. He's going to talk to us about cryptocurrency. His name is Shehan Chandrasekera. Did I say that right?
Yeah, that's right.
Interestingly, he's one of a handful of CPAs in the country who's recognized as a real-world operator and a conceptual subject matter expert on cryptocurrency taxation. He's the head of tax strategy at CoinTracker, partner at, how do you say that?
JAGArgueta
CPAs. You are a Forbes Tax Contributor and a CPE instructor who has won various awards, the 2020 and 2019 CPA Practice Advisor, 40 under 40 accounting professionals. The Texas CPA's 2020 Rising Star, Outstanding Young CPA of the Year, and among 21 accountants mentioned on Accounting Today who will be helping shape and reshape accounting in 2020 and beyond. You're also a renowned speaker. You've done speaking engagements with many organizations, including Google, Coinbase, Lyft, AICPA, the American Bar Association, and many state CPA societies. So, Shehan, welcome to our podcast.
Yeah, thanks for having me.
Well, before we kind of get started into the questions, I know enough about crypto to be dangerous. I dabble in a little crypto investment myself. I saw a really interesting presentation a few years ago about crypto where, the whole life cycle of crypto is probably, this is what this speaker said, it was about a 20-year, like from original conception to fully seeing the vision of crypto could be a 20-year cycle. So we'll touch on that maybe today. But first, we'd like to get to know you a little bit better. So if you would just tell us a little bit about yourself personally, about your background, and how you chose this really interesting niche part of the industry.
Yeah, I'm obviously CPA ever since I got out of school, or worked in public accounting. Pretty much started as an intern and made it to the partner within about 6-7 years. So yeah, in my whole life I've been in a public accounting, but right now I'm in the intersection between accounting and accounting technology products like CoinTracker. So it's a different role, but I'm still in public accounting because I'm still a partner at JAGArgueta. So actually, in the beginning of my career, I was focused more on traditional type of industries like construction, real estate, corporate taxation, etc. In 2017, I picked cryptocurrency as my niche, and since then I've only focused on cryptocurrency related taxes, and also some of the startup related tax issues, because people who have cryptocurrency there tend to be startup employees. They have stock compensation issues, structuring, etc. So right now I only focus on cryptocurrency related tax issues when it comes to personal and business side of things, and some of these startup related tax issues. That's from my public accounting point of view. And I'm also with this company called CoinTracker that they're building an accounting or tax system to track cryptocurrency gains and losses. So I'm kind of advising them about the tax laws and how they should build things. Talking to hundreds of accountants every day to understand their pain points, what they're going through when it comes to figuring out cryptocurrency related taxes. So yeah, I wear a bunch of hats. It's really hard to explain in few words what exactly I do in day to day.
Yeah, it's such a new and fast growth industry. Like I know, like when I buy crypto, I use Coinbase, which I guess is one of the most popular apps for that. And I was wondering, like, do they give me, is there a way to get a report for taxation at the end of the year through Coinbase? Or is it too new where they haven't thought of that yet? Like, do you know the answer to that question? I'm just curious about that.
So yeah, like I said, Coinbase is probably the most popular cryptocurrency exchange that the US has. They have roughly 43 million users according to their S1. They're planning to go public pretty soon as well. The problem with crypto exchanges is that they don't give you any tax forms at the end of the year. Like think about companies like TD Ameritrade or JP Morgan. You trade your stocks and securities at the end of the year. You get this nice form 1099B. All you had to do is transfer that information to the tax return to calculate your taxes. But in the crypto world, it doesn't happen. Like for example, Coinbase, they stopped issuing like any type of tax forms for your trading activity in 2020. So in that case, you're going to need like some tools, for example, like CoinTracker to kind of figure out your cost basis, your sales and your gains and losses, because these transactions are complicated. And especially if you have your cryptocurrency spread across like multiple exchanges, it's really hard for you to keep track of all these things manually. So yeah, to answer your question in a simple way, the Coinbase does not issue any tax forms for 2020 if you have any trading activity, and it becomes your responsibility to figure out the gains and losses.
Interesting. So that's where the CoinTracker comes in. Now, is that an integrated application? Does it integrate with these so that you don't have to like have a, you're not having to actively track your sales and purchases?
Yeah, so the CoinTracker has a direct integration with Coinbase. So if you go to Coinbase desktop app, tax center, if you just click CoinTracker button, like all that information gets transported into CoinTracker, and then the CoinTracker gives you all the tax forms, which are the Form 8949 and Schedule D.
Gotcha. So just from a high level, I know we've kind of touched on some of the high level stuff, but how are cryptocurrencies taxed?
Yeah, cryptocurrencies are taxed as property according to the IRS. IRS first mentioned about this rule in 2014, so this is nothing new. These rulings and guidance have been in place since 2014. What I mean by property is whenever you sell a property, there's always two things. There's a sales price, and there's the cost basis, meaning how much you paid for that property. So say that you got a Bitcoin for $10,000 and you sold it for 50,000, you got to pay capital gain taxes based on the difference, which is 40,000. So that's just a very high level way of kind of understanding how taxes work for crypto. But there are so many nuances and edge cases. But if you make a profit, you got to pay capital gain taxes.
So it's the same sort of just like stocks. Like if it's within a year, it's a short-term gain. If it's more and I'm so out of the tax law weeds.
No, you're right. It's the stocks is a great analogy to use here. It's just very similar to stocks. There are edge cases which I will not go into here, but yeah, I mean, if you sell your coin after holding it for less than 12 months, that's considered short-term capital gains. If it's short-term gains, it's going to get taxed at your ordinary income tax bracket, just like regular income. If you sell your coin after holding it for more than 12 months, then you get these preferential tax rates, and you could get taxed at either 0%, 15%, or the maximum 20%.
Okay. Is it reported the same way as stocks? Is it put on the same schedules? It's reported alongside stock trades?
Yeah, so these are reported very, very similar to stocks. Both stocks and cryptocurrencies go on Form 8949 and Schedule D. Yeah, they're placed in the same place. Yeah.
Gotcha. So what are the things that, for CPAs are in public practice, they're doing tax returns for clients that are trading crypto? What do practitioners need to know to help serve those clients?
Yeah, I think the main thing to know is, at a high level, this has nothing to do with accounting. There's a whole industry is emerging right now. There's a lot of millennials are investing, money on these, new type of asset class like crypto, Bitcoin, Dogecoin, and etc. And as these people grow, they're going to need these accountants to help with them taxes. And as accountant, this is an area that we really need to know. And this is no longer a niche area, especially, if you see the tax forms on form, 2020, there's a question about virtual currency on the front and center of the form 1040. So this is how serious the IRS is taking this issue. So yeah, this is not the time for accountants to have a close mind about this, because when I spoke about this subject, several years ago, accounting committee was like, oh, cryptocurrency, it's illegal. You shouldn't touch it. It's a scam. That's not the case. Like, for example, several weeks ago, Tesla invested $1.5 billion in Bitcoin. And among, there were other publicly traded companies who invested in Bitcoin. So yeah, at a high level, for accounting committee, what I had to say is that let's just have an open mind, especially when serving these clients. And then number two, it's more like a tactical thing. Just know some of these nuances that I described earlier. Just don't ask for your client, hey, can you give me your capital gains and loss report or 1099-B, because there's no such a thing in cryptocurrency world. You just have to direct your client to a tool like CoinTracker or something else that's going to help you reconcile those gains and losses, and then you can add those information to the tax return. And the other advice along with that is that don't try to do it on an Excel spreadsheet, because especially if your client has so many exchanges, it becomes virtually impossible for you to track it. And you can create more value by advising the client on certain things versus ticking and tying numbers on an Excel spreadsheet. So those are the two high-level things I would tell the accounting community.
Because I mean, some of the older CPAs, I would imagine, don't realize how frequent this trading can happen. Like, some people in crypto, they're trading daily, sometimes multiple times in a day, I would imagine. Is that?
Yeah, that's right. There's and I mean, those are those traders, high frequency trader. They could have 100, 200 trades a day. But also you could be somebody who's just having maybe 2 to 3 trades a day, and some of those trades get executed in different ways. Say that you want to sell like 1 Bitcoin, it's rarely get executed as just one transaction. Typically, what happens is that 1 Bitcoin trade gets executed in a series of transactions. So on the summation of those transactions would equal to that 1 Bitcoin. So in those cases, even though if you're thinking, okay, I just had 2 3 transactions, but if you look at the reports, there's a series of transactions, and each of those transactions has a different sales price and a cost basis, because those are executed at slightly different times. So that's why I say it's impossible for you to figure out gains and losses manually.
Yeah, it's it can be kind of mind-boggling. And I know that, gosh, the fluctuation in the prices, I guess it just sort of, this is not going to probably stop anytime soon. This frequency of trading is going to be a continued aspect of crypto, I would imagine. What are your personal thoughts about investing in crypto? Like, what cryptos do you like or invest in? I'll go first. So I have a little bit of Ethereum, and I have some ZRX, and I have a little bit of Bitcoin Cash. Those are the 3 that I kind of watch, but curious as to your take on.
Yeah, I'll share my personal investment kind of like thesis. And by the way, this is not investment advice by any means. I think, like you said, there's so much fluctuations in the coin prices in this market, and quite frankly, it's very distracting to me to kind of open up my portfolio and see the prices every day, because I can create more value by focusing on other stuff that I'm working on day to day. So what I've learned over the past 3 to 4 years is that what works for me is dollar cost averaging. So you allocate certain amount of money that you're willing to lose or comfortable, and you buy Bitcoin or whatever the cryptocurrency that you like every week or every month, irrespective of the price. And in the long run, you're gonna see you're gonna do well. And I have experiences in the firsthand. So that's my investment thesis, without just trying to capture these short-term fluctuations.
Yeah, don't get caught up in the market. Just be a regular investor and realize you're in a risky asset, and don't bet the house on it.
Yeah, and then the other thing to note is that just know that your downside is always limited to what you invest. So as long as you're willing to lose that and it does not have any significant impact to your lifestyle, I mean, you're fine, because your downside is limited, your upside is unlimited, literally.
Yeah.
And Bitcoin and crypto in general, this is one of those few assets class where that you could have these 10x, 100x exposure without you having to be an accredited investor. Because otherwise, to get these, high multiple returns, you had to be accredited and you had to, invest in private companies, to venture capital funds, and etc. So when you think about those things, it has the ability to give that 10x, 100x gains, and it is also liquid, unlike investing in private markets.
Yeah.
To me, those are two great characteristics to invest.
Right.
But just the amount that you're willing to lose.
Right, exactly. No, I totally agree with that. And I agree with your sentiment that this is not investment advice. What about tax planning strategies for crypto? Any particular strategies that you want to share?
There's ton. I'll just give maybe some simple ones. Then I'll just briefly mention some advanced one that you can have a conversation with your CPA about those things. I think the simple ones are just in this industry, we call it hodling, meaning you're just holding onto crypto without selling. Just know that what you don't sell don't get taxed. So you can have a portfolio of $1 million or $100 million, and if you don't sell it, there's no taxes. So that's the simplest way to do it, because literally you don't have to do anything. You're just hodling. Number two, if you really need some liquidity, if you really need to cash out, you can cash out the coins which you held for more than 12 months. As I mentioned earlier, those are subject to long-term capital gain taxes, which have more favorable rates for you than selling coins which you held for less than 12 months. And then number three, you could play with these, accounting methods. There are a bunch of accounting methods, FIFO, LIFO, and HIFO. FIFO stands for first in, first out, LIFO stands for last in, first out, and HIFO stands for highest in, first out. So these accounting method pretty much dictates which unit of coin you are selling for tax purposes. And that does have a very big impact on your tax bill, because like, for example, if you were to sell the coin which you paid the highest amount for, that reduces your delta, thereby the capital gain taxes. So if you use something like CoinTracker, with just a click of a button, you can kind of change the accounting method and see the impact that has on your tax bill. So those are the three simple things that you can do. If you want to talk about the advanced strategies, there's ways that you can collateralize your crypto and get some, cash. So that's a great way to access liquidity without triggering a taxable event. You can roll over your gains in the opportunity zones, and you can donate cryptocurrency to get a deduction. There's so many depending on your tax profile. Yeah.
Yeah. Are you seeing a lot of charities accepting crypto now? Is that becoming a more popular?
Yeah, I've seen a big improvement in that space, and also there are companies that help charities kind of accept the cryptocurrency as a donation. So these are companies that stay in between the donor and the donee, and these companies provide that technology layer for the charities. So with just a click of a button, these companies process the payments and everything, and then then the charity gets a donation. So I've seen an improvement, but but obviously it's not like huge, but it's trending upward in my opinion.
Yeah. Have you seen anybody put crypto into like a retirement account so that you can trade tax-free?
Yeah. So actually that's one thing that I forgot to mention in the tax planning side of things. So the self-directed IRAs can hold cryptocurrencies. And if you Google companies, self-directed IRA for crypto, you're going to see a bunch of companies offering these services. Pretty much you're, either rolling over your existing Roth or regular IRA into one of these, self-directed IRAs, and then you're buying your crypto inside the, custodian account. And pretty much your gains are tax sheltered until your retirement. So it's a great way to save for your retirement without having to pay taxes.
Now, could you theoretically open a crypto, like a Coinbase account within a retirement account so that you could do, if you were doing that frequent trading, could you do it within that? Is that a possibility?
Not that I know of. I think the general workflow is that you set up an account with one of these custodians, and these custodians are connected to major exchanges like Coinbase and Gemini. And then you got to do the trading through this custodian account. And it's very similar to you're doing a direct trade on Coinbase, but the workflow is that you got to do the trading through that custodian account.
And then they just use Coinbase as a back end application sort of thing.
Yeah.
Okay. Interesting. How do you think it's going to impact? How is this going to impact different industries? Like when I went, so to give you some background on sort of one of the things that I got a great deal of crypto information on was I went to an event in Toronto, Canada that was put on by EO, which is Entrepreneurs Organization. And they had a someone who'd been very involved in the crypto industry back, when it was being created. And she indicated this 20-year span where, she kind of likened it to the internet. So you had, when the internet was first sort of out there, it was really clunky at first. Like it was horrible. You'd have this dial-up connection and it would take a page on the web would take, 2 minutes to load. And I think that's where the whole surfing the web came from, because you felt like you were waiting for a wave, you're waiting for that information. And so the promise of the internet initially was like all these great things, but it took 20 years to actually realize it. And she was saying that cryptocurrency may have a similar sort of cycle. And we're probably this was back in 2017. She's like, we're maybe halfway through that cycle. And the promise of it is you're going to have these smart contracts. You're going to have these, it's going to change the banking industry. But that's going to take time. What do you think? What do you see this doing to the accounting industry?
Yeah. The cycle, just to kind of touch on that, a lot of people think that Bitcoin is the very first cryptocurrency, but that's not the case. There were other cryptocurrencies like, BitGo, DigiCash that were invented in actually 1990s and 1991. And then they never, took off. So Bitcoin, came into the circulation around 2009, 2010. So that itself is a 20-year cycle, from DigiCash to Bitcoin. And now Bitcoin, now we're in 2021. Now we're seeing other improvements in the DeFi, decentralized finance. There's other coins like Ethereum, NFTs, and etc. This technology, they take time. That's why, you need to, if you're investing in these things, you need to expand your time horizon. And when you expand your time horizon, and in 10 years you look back, and all of a sudden you look like a genius, because unlike other people who are trying to profit out of these, short-term fluctuation, you are investing for the 5, 10 years. And if you ask anybody who invested in, Bitcoin around 2010, 2011, which is 11 years ago, they're, multimillionaires, because they were seeing this today, 10 years ago. So that's the kind of like the mindset that you need to have. I think the second part of the question, what kind of impact this would have on the accounting industry. Right now, I don't see a ton of impact on, blockchain technology. Obviously there have been buzz and there's conversations around, how you can use blockchain to, make financial statements, easy to audit and etc. Again, I haven't seen those things being adapted in real world today, because when it comes to compliance side of things, it hasn't reached that level yet. The technologies they're trying to solve other problems, like how can we open up the lending system to people without credit? How can we send money from one person to another while paying the least amount of taxes and least amount of transaction fees and etc. So those are the problems that are being focused as a community right now. I haven't seen a lot of impacts in the accounting field.
Okay. Well, this has been really eye-opening. We've had quite, this is an interesting topic. It's such an interesting technology and an interesting investment. I want to kind of go to sort of a couple of questions just that I like to ask of all of our guests. And one of those questions is books. If you're going to recommend one book to our listeners, what would that be?
There is, a lot of good books. I think if you're really into building entrepreneurship and, building these, multi-billion-dollar companies, I would read 0 to 1 by Peter Thiel. Yeah, I think that would give you a good start.
Interesting. All right. What's one bit of advice, guidance, or life lesson would you like to share with our audience?
I would say, just think long term. I know it's easy to say, and we get distracted by these, short-term things. Think long term, and if you look at all these, billionaires and people who have changed the world and who are in the process of changing the world, these are the people who think in 5-10 year, time horizons. And for them, even 5 years could be short term. I'm talking about Jeff Bezos, Elon Musk, and etc. So think long term. When you think long term and expand your time horizon when it comes to decision making, all of a sudden you're going to become a genius, but it's going to take time, but definitely you will be a genius.
Yeah, that's cool. That's great advice. So Shehan, how can people best follow you and connect with you?
Yeah, I'm very active on Twitter. My handle is pretty easy to remember. It's at the Crypto CPA. And I'm also on LinkedIn, and feel free to Google me, Shehan Chandrasekera, or just Shehan Forbes, and you're going to see my Forbes column and all the connections to my, social handles. Okay,
great. We'll post that on the blog page as well when we post this podcast. And well, Shehan, thank you so much for your time and your insights. This is such a fun topic and a cool topic, and now it's really impacting the CPA industry, with this taxation. So I'm sure you'll have a busy schedule for years to come.
Yeah, I hope so. And thank you for having me, Brandon.
All right. Thanks for listening to the Accountant's Flight Plan podcast. If you like what you heard today, please follow us so that you can get updates when new episodes are released, and share our podcast with your friends and colleagues. You can also follow Poe Group Advisors on social media. Please visit our website for more information at poegroupadvisors.com.